Is it time for a pullback? That's the question after a little bit of downside today. It's not like we haven't seen downside before. We've seen plenty of downside before. But it's time to analyze the situation and come up with a conclusion. So let's go back a little bit in history. We've seen this obvious strong rally. The day, 2 days before that period, right before the Fed was going to speak, we said, all right, time to be greedy when others are fearful. And that was the right call, it looks like. However, as the first day of strong rally occurred, we said, okay, this is warranted. It's mostly in the most beaten down tech stocks, the Cathie Woods, the ARK stocks, etc. And those are down for the last year. And a lot of the stocks we like happen to be in that category. And we'll probably be okay seeing 1, 2, or 3 days of this just continue. But what we didn't want to see was a massive run in the NFTs, in the speculative meme type stocks. And that's what we've been getting in the past couple days. So in the past couple days, we've made at my fund a number of positions to play the downside. And we have in these videos warned that a possible downside may occur because we don't expect to get to new highs anytime soon, given rising rates, given geopolitical uncertainty, given the fact that at the previous highs, in my opinion, multiples were too high. The price of stocks was just too high. So I don't think stocks should get very cheap. I don't think we need a massive crash. But I don't think stocks should be very expensive. They shouldn't be uncomfortable to buy. It shouldn't be this, big debate about whether you should buy Apple or Microsoft or Walmart. But it is. It was. It certainly was at that point. It was just like, yeah, I want to buy this stock. And in a normal environment with normal multiples, I think I can buy this stock. It's a much easier decision to buy a stock like Apple. But right now, you hesitate. Or at least at that period, you hesitated. It was just, sure, it's a great company, great product, but it's very expensive. The price you're paying relative to how many years you need to wait for that company to earn the price you paid is quite a long time. And it's too long. That's just like, that's investing. Price is the most important thing. And thus, we reached a point and prices fell. So we've seen a massive move getting really close to those previous levels. Not there, but close enough that I think it's time for a pullback. And I've been saying in the past couple of videos. Today we saw a little bit of a curve into the close. I'm not trying to extrapolate that. Tomorrow could be up for all I know. Who knows? But it's possible we've gotten close to that point, and maybe we're at that point of discomfort to buy. I think that's what the whole thing is. You become uncomfortable buying stocks, particularly once the safest, most sound, et cetera, stocks become uncomfortable to buy. That's when you get a pullback. How big of a pullback? I'm not saying 10, 20%. Let's look at the things in a little bit bigger, even bigger of a picture. What does the market look like, in my opinion, the rest of the year? The same thing I've said in the past couple of videos. It should just be a sideways market. We don't hit new highs, but maybe the lows were too low, and stocks, many, become very cheap down there. So we kind of fluctuate. Maybe we're at the top of the range now. Maybe we have to come down. And as we come down, you can expect some people to panic. They're going to panic, and they're going to panic sell because people panic sell more on the downside than they panic buy on the upside. That's just the way it is. As the saying goes, stocks take the elevator on the way down and the stairs on the way up. However, the inverse has happened in the past week or two. Stocks are taking the elevator on the way up. It's not the way it's supposed to work. So, let's see what happens. I say pullback, very much warranted. Let's allow it to happen. Let's see if it happens. There's certainly some stocks that are still buys. I mean, Smile Direct Club, one of my favorites, one of my larger positions, I think is still very cheap. Editas down here, I think is still very cheap. Apple, yes, interesting announcement today. We'll see what they do with that. But it's kind of expensive. Microsoft, good business. Just bought the Xbox Series X because I can deduct it, because as you can see, I spend 8-10 hours a day using it for work. Good business, make a lot of money, but expensive because they're a good business that makes a lot of money. And we don't want a business, no matter how good it is, that's expensive. We don't want to buy anything expensive. We want to buy stuff that's cheap. And as we approach these levels, getting closer to previous all-time highs, there's a lot less that's cheap, a lot more that's expensive. Let's not forget, just look at the market top, okay? Look at November. November is when the super expensive stuff started pulling back. The tech stocks, the bigger tech stuff like Square, etc. Square might be a huge business one day, but maybe it was too expensive relative to its current cash flow and the risk and years that you have to wait. It matters. People need money. They have expenses. They have other opportunities. That's just the way it is. The market got very choppy. Look at Microsoft. Look at Microsoft's chop. It's beating against that point of discomfort when you look at its previous all-time high. Same thing for the S&P 500. It has this one last little burst, a slight little level, and it's calm, and it's a calm before the storm. Okay? There's a point of discomfort where there's just nobody has the comfort to go out there and buy. When stocks are cheap and people say, wait, maybe things are going to be okay. It's easy to buy. It's simple. You feel good. You feel comfortable. It's all fun. And it's not games. It's all fun. Because you feel things are cheap. When things are expensive, some people are buying. But people who are actually doing their homework feel uncomfortable. They literally feel uncomfortable. They're like, yeah, it can go up, but it can go up like 2% from here. Well, I need to generate returns to have money that I need to make more money on. That's what I want to do. But I feel uncomfortable buying. So to watch out for the points of discomfort. That's today's video. Maybe it's here, maybe it's not. Let's not be surprised by a pullback, but let's see how things play out. Let's be patient. I've got about 15% cash on the sidelines. Got about 5%, I would say, allocations to SPY puts and short positions. So that's my hedge. We'll call it 20%. I'm overall largely bullish. So that's today's video. Until next time, peace out.